In today's video, we're going all in. We're going to reveal the top 7 candlestick patterns that every trader should know, from the most basic patterns that beginners can use right away, all the way up to advanced setups that professional traders rely on every single day to make smarter, more confident trades. All right, hold up. Before we jump into the patterns, let's talk about candlesticks, because if you don't understand what a candlestick is, none of this is going to make sense. But don't worry, I'm going to make it super easy. A candlestick is basically a quick and simple way to look at the historical price of anything you're trading, whether it's Forex, stocks, crypto, or whatever. Each individual candlestick represents how the price moved over a specific period of time. So if you're looking at a daily chart, that means each candle shows what happened during one full trading day, from open to close. Now, when you look at the chart, you're going to see 2 main types of candles, green candles and red candles. Green means go, price went up. Red means stop, price went down. So here's how it works. A green candle forms when the closing price is higher than the opening price, meaning buyers were in control and pushed the price up. A red candle forms when the closing price is lower than the opening price, which means sellers dominated and pushed the price down. But wait, there's more. Each candlestick has 2 key parts, the body and the wicks, also called shadows. The body shows the range between the open and the close, the real battle zone. The upper wick shows the highest price reached during that time. The lower wick shows the lowest price hit during that same period. Here's a quick way to remember. For a green candle, the bottom of the body is the opening price and the top is the closing price. For a red candle, it's the opposite. The top is the open and the bottom is the close. And this is why traders love candlesticks. They give you so much information in one little symbol. You can literally see who's winning the fight, buyers or sellers. And that's exactly what we need to find smart trading opportunities. So now that you understand what candlesticks are, let's get into the patterns. And trust me, this is where things get really exciting. Okay, before we jump into the actual candlestick patterns, which are going to blow your mind, there are a few critical things you need to understand about how candlesticks actually behave. And trust me, this will make spotting winning trades a whole lot easier. Let's start with concept 1. Big body versus small body. This is super important, so lock in. The size of a candlestick's body can tell us a ton about what was really going on between buyers and sellers during that time. Think of it like a boxing match. The candle is the scoreboard. So let's look at 2 green candles. The first one has a big body and tiny little wicks. Here's what happened. The price opened down here. Sellers tried to push it lower, but boom, buyers stepped in like absolute beasts and took control. They pushed the price way up with barely any resistance. The result? The candle closed super close to the top. That big green body is screaming, buyers dominated. Now let's compare that to a second green candle, but this one has a much smaller body and longer wicks. Here's what's going on. The price opened, buyers pushed it up again, just like before, but this time the sellers weren't sleeping. They came back hard, dragged the price back down almost to where it started. Sure, the candle still closed green, but only barely. So what does that tell us? It means the buyers won, but barely. It was more like a 51-49 battle. So here's the rule. If the body is large and the wicks are small, it usually means one side was clearly in control, either buyers or sellers. That's a strong signal, but if the body is small and the wicks are long, it means the fight was messy, uncertain, and neither side had real control. That's a sign of indecision, and you need to be careful trading in those moments. Understanding the size of the candlestick body gives you an X-ray into the battle between buyers and sellers. And when you can read that battle clearly, you can start to predict what might happen next. And that's where the real power of candlestick trading begins. Alright, let's dive into concept 2, large wicks. And no, we're not talking about candles on a birthday cake. These wicks are one of the most important clues you'll ever get when reading price action. Seriously. Once you understand this, you'll start seeing the market in a whole new way. So here's what you need to know. When you see a large wick sticking out from above the body of a candle, that's a huge red flag for buyers. Why? Because it tells you that even though the buyers tried to push the price higher, they failed. The sellers came in strong, slapped the price back down, and said, "Not today." This tells us that there is massive selling pressure at those higher levels. If buyers want to break through that zone, they'll need to bring some serious muscle. And until they do, it's going to be hard for the price to go up. Now flip the situation. If you see a long wick below the body, that's a big warning sign for sellers. It means the price dropped, maybe hard, but buyers stepped in fast and pushed it right back up. It's like buyers were waiting at the bottom, ready to catch the fall and fire back. This shows us there's strong demand at those lower levels. So if sellers want to drive the price down further, they're going to have to break through a wall of buyers. So remember this rule: big wick on top, sellers dominating the highs, big wick on the bottom equals buyers dominating the lows. These wicks are like footprints of the big players. They show you where the action is happening and where the market is most likely to react again. And here's the deal: if you can understand the story behind the body and the wicks of a candle, you're already 10 steps ahead of most beginner traders. These two concepts are foundational. They are the key to unlocking everything we're about to teach in the next section on candlestick patterns. If you're enjoying this breakdown so far and you're learning something new, smash that like button and make sure you subscribe, because we're just getting warmed up and the next part is where things get even more exciting. Time to break down the most important basic patterns. It's go time. We're officially diving into our first candlestick pattern, and trust me, you're gonna love this one. It's called the bullish pin bar, and it's basically the market screaming, "The buyers are back, baby." So what is a bullish pin bar? It's a powerful reversal pattern that tells you the downtrend might be over and the price is getting ready to head up. This little candle might look small on the chart, but don't let that fool you. It packs a serious punch when it comes to spotting potential buy opportunities. Here's what the bullish pin bar looks like. It has a small green body near the top, a long wick sticking out below the body, and almost no wick on top, or just a tiny one. Now let's break down what's really going on here, the psychology behind the candle. Imagine this. The market opens at a certain price. Suddenly, the sellers show up and start pushing the price down hard. It's looking bearish, it's falling, people are panicking. But then, out of nowhere, the buyers strike back. They come in strong at the lower price levels, scoop up the asset, and push the price all the way back up past the open. That's a huge shift in momentum. It tells us, hey, the sellers just got exhausted and the buyers are taking control. And here's the kicker. The fact that the buyers managed to push the price back above the open after the sellers had the upper hand means the buyers weren't just present, they were dominant. When you spot a bullish pin bar after a strong downtrend, it could be the very first clue that the tide is turning, the down move is fading, and an uptrend might be starting. So how do we trade this thing? Here's a simple strategy. Step 1, wait for the bullish pin bar to form, ideally at a support level or key zone. Step 2, place your buy order just above the high of the pin bar. Step 3, set your stop loss below the low of the pin bar to protect yourself if the move fails. Step 4, target the next resistance level or structure where price is likely to react. But wait, don't just trade every pin bar you see. You want to combine this with other clues like support zones, trend direction, or volume confirmation. We'll break all of that down later in this video. For now, remember, the bullish pin bar is your go-to pattern for spotting when the buyers are stepping up and possibly flipping the market in your favor. Let's move on to the next pattern. It gets even better from here. The bearish pin bar, and this one is crazy powerful if you know how to use it. So here's how it works. Imagine a candle on your chart that's red, has a tiny little body down near the bottom and a giant wick sticking up above it like a skyscraper. There's either a super small wick or no wick at all below the body. That shape, that's your bearish pin bar. And it's basically the market screaming, sellers are taking over. And now here's the story behind that candle. And this is where it gets fun. The candle opens and at first the buyers get hyped. They push the price up. Everything looks great for the bulls. But then boom, the sellers show up like a wrecking ball, smash the price back down. And not only do they erase all the buyers' progress, but they actually push the price even lower than where it started. By the time the candle closes, it's sitting right near the bottom. That's a huge sign that the sellers just kicked the buyers out of the driver's seat. Now here's how you take advantage of that. If this bearish pin bar shows up at a strong resistance area, or alongside other confluences like a trend line or key level, that's your signal. You can enter a sell trade just below the low of the pin bar and place your stop loss just above the high. That way, if the sellers really are in control, you're jumping in right as the momentum flips in your favor. And the best part? This setup gives you an amazing risk to reward ratio because your stop is tight, and if the market moves your way, it can drop fast. So don't just memorize the pattern, understand the psychology behind it and use it with confidence. Pattern number 3 is here, and this one is kind of mysterious. It's called the doji. Now listen, this candlestick pattern is unlike the others we've talked about so far. Why? Because it doesn't shout buy or sell. In fact, it's like the market standing still thinking, what should I do next? So what exactly is a doji? Picture this. The price opens, it moves up, then down, then up again, then down again, like a tug of war between buyers and sellers. But in the end, neither side wins. The candle closes almost exactly where it started. That's a doji. It looks like a candle with a tiny little body in the middle and equal length wicks sticking out on both ends, top and bottom. It's like a sword just standing upright in the chart. Now here's what that means. During that time frame, the buyers and sellers were in an all-out battle. The sellers tried to slam the price down, the buyers pushed it back up. But by the end of the candle, it was a complete draw. Nobody took control. That's why the doji is seen as a neutral signal. But here's where it gets exciting. Even though the doji doesn't tell us where the market is going yet, it's actually a huge clue. Think of it like this. When you see one doji, it's a pause. But if you start seeing 2, 3, or even 4 dojis in a row, holy cow, the pressure is building. That's a sign the market is getting ready to explode in one direction. It's like shaking a soda bottle. Eventually, it's going to pop. So what do? You wait for the breakout. If the price smashes above the high of the doji cluster, boom, buyers win, go long. If it crashes below the low, sellers take over, go short. But don't guess, be patient, let the market show its hand. And just to recap, unlike the last 2 patterns, the bullish and bearish pin bars, the doji doesn't give you a direction right away, but it gives you something just as valuable, a warning that something big is coming. And when you learn to read that tension, you'll start catching some massive news before anyone else even sees them coming. All right, buckle up, because now we're diving into intermediate territory. From this point forward, we're not just looking at single candles anymore. Oh no, we're stepping it up with 2 candle patterns. And the first one is a total game changer, the bullish engulfing bar. Here's how it works. Imagine the market is dropping. The sellers are shruppy. We see a red candle, but then, bam, a giant green candle shows up and completely swallows that red candle whole like a hungry monster. That's a bullish engulfing bar. Let's break it down step by step. First, there's a red candle. That's the sellers doing their thing. Then the next candle opens and the buyers come in like absolute beasts. They push the price not only higher than the red candles open, but they take it so high that the entire red candle gets engulfed. The green candle's low is lower than the red candle's low, and its high is higher than the red candle's high. It's a total takeover. And here's what it means psychologically. During the red candle, sellers are clearly in control. Everyone's thinking, oh no, the price is going down. But then the next candle opens and the buyers don't just push back, they completely crush the sellers' momentum. It's like the market did a 180 in real time. So how do you trade it? Easy. You wait for that green candle to fully engulf the red one. Then once the price breaks above the high of that green candle, boom, that's your signal to enter a buy trade. For your stop loss, place it just below the low of the bullish engulfing candle. That way, you've got smart protection in case the market fakes you out. But here's the catch, and this is super important. Don't just trade this pattern blindly. Look for confluences. What's that mean? You want to see other signs, like strong support zones, trend lines, or previous price action, that back up what the pattern is telling you. When multiple signals are pointing in the same direction, your chances of winning skyrocket. So in short, bullish engulfing buyers taking back control in a big way. Use it wisely, combine it with smart analysis, and is pattern to be a total weapon in your trading strategy. Let's go. Okay, now it's time for pattern number 5, and trust me, this one is savage. It's called the bearish engulfing bar, and when this shows up, it's like sellers just kicked the door down and took over the entire party. Here's exactly what happens. You've got 2 candles. The first one is green, meaning the buyers were in control. Everything's looking up, people are buying, and the market is climbing. But then a massive red candle appears out of nowhere and completely devours the green candle like a T-Rex eating a cheeseburger. I'm serious, the red candle isn't just bigger, it's a monster. The top of the red candle goes higher than the green candle's high, and the bottom drops way lower than the green candle's low. That's what we call a full engulfing, and it's not just dramatic, it's powerful. Now let's talk psychology, because that's what really matters in trading. When the green candle formed, buyers were feeling good. They had momentum, the price was rising, people were optimistic. But then, boom, the red candle opens and buyers try to push the price even higher. They're like, let's go to the moon. But just when it seems like the party is about to take off, the sellers crash in like a wrecking ball. They see the high price as the perfect spot to dump their trades, and their selling power is so strong that they not only erase the green candle's progress, they push the price even lower than where the whole thing started. That's like flipping the entire story in just one. And what does this tell us? It tells us that the sellers just took control of the market, like flipping a switch. So if you see this setup, it's your signal to prepare for a potential price drop. You can enter a sell trade just below the low of the red candle. That's your entry point. And for protection, place your stop loss above the high of the red candle. That way, if the market fakes you out, you're still covered. But wait, just like with any pattern, don't go in blind. Always check for confirmation signals like trend direction, resistance zones, or volume spikes. The bearish engulfing bar is insanely powerful, but it works best when it's backed by other clues that the market is about to reverse. So to wrap it up, this pattern is like the ultimate power move from the bears. It's loud, it's aggressive, and when used correctly, it can help you catch huge downward moves at just the right moment. Let's take things to the next level. Advanced candlestick patterns, let's go. This is pattern number 6. The legendary morning star. I know, I'm not talking about a magical anime move. I'm talking about a 3-candle pattern that could signal the start of an epic price reversal to the upside. Here's how it works. Imagine the market is dropping hard. Things look bad. The first candle in this pattern is a big fat red candle. It's massive. It screams the sellers are winning. It's the kind of candle that makes beginners panic, but wait, the story's not over. Then comes the second candle, and it's tiny. It's a doji, or maybe a pin bar. Basically, it's got a small body, long wicks, and it looks like the market has hit the brakes. Buyers and sellers are now in a tug of war, and nobody is winning. This is what we call indecision, and it's a sign that the sellers might be getting tired. And then, boom, the third candle slams in, and it's green, it's strong, and it blows past the highs of the previous candle like a rocket. If this green candle is the same size or even bigger than the first red candle, that's a huge deal. That means the buyers aren't just waking up, they're coming back with a vengeance. Let's talk about the psychology behind this beast of a pattern. First, the market drops hard. The The red candle shows us that sellers were completely in control. People are dumping positions, price is falling fast, and it looks like a total disaster. But then something changes. A tiny candle appears. That's your second candle, the doji or pin bar, and it means the fight is starting to shift. The sellers are running out of steam, and the buyers are saying, hold up, it's our turn now. And finally, the third candle, the green one, is the buyer's big comeback. It's like the market just drank an energy drink and blasted off. If that green candle closes above the high of the red candle, it's like a big flashing sign that the trend could be reversing. So how do you trade this? You enter a buy trade above the high of the green candle. You want to ride the momentum as it continues upward. You place your stop loss just below the low of the doji candle. That way, if things don't go your way, your risk is controlled. But wait, don't just jump in blind. Like I said before, you always want to look for extra confirmation. Are you at a key support level? Is the volume spiking? Are other indicators telling the same story? Stack the odds in your favour. Bottom line, the morning star is one of the most reliable bullish reversal patterns out there. If you learn to spot it and use it with confluence, you could catch massive trend shifts, and that means big potential gains. Let's keep going. The next pattern is even crazier. Pattern number 7, the evening star pattern. And trust me, this one's a total game changer if you know how to spot it. All right, buckle up because this is where things get really cool and potentially really profitable. So here's what you're looking for. This pattern is the evil twin of the morning star. Instead of predicting a bullish move, this one screams, warning, the market is about to drop. It's made up of 3 candles and each one plays a critical role. First, you've got a big, strong green candle. That's the buyers in control, flexing their muscles and pushing the price up. They're hyped, they're dominating, everything looks like it's going up forever. But wait. Suddenly the second candle shows up and it's a tiny doji. Super small body, long wicks, just sitting there like, oh, something's changing. This candle means the market is indecisive. It's like a pause, a moment of confusion. The buyers and sellers are fighting and neither side is winning yet. Then, boom. Here comes the third candle, a massive red one, and it crashes through like a wrecking ball. This is the sellers taking over. It breaks down past the previous candle's low, showing that the buyers totally lost their grip and now the market is heading down. Hard. So how do we trade it like a pro? Simple. If you spot this pattern, you can place a sell order just below the low of that big red candle. And to protect yourself, because we're not gambling here, you place your stop loss just above the doji candle. That way, if things go the wrong way, your risk is managed. Smart, right? So to recap, green candle buyers in control, doji a standoff, red candle, sellers take the throne. That's the evening star. And hey, don't go anywhere because we're not even close to done. We've covered the 7 most powerful candlestick patterns, but next we're diving into how to combine them with price action to unlock next level entries. This is where things go from cool pattern to holy cow, that trade actually worked. Let's go. All right, traders, you've learned the candlestick patterns. Now let's level up and combine them with price action using support and resistance and trend lines to absolutely supercharge your trading setups. Let me show you how to turn basic candles into high probability sniper precision trades. This is where the magic happens. So picture this, the market is in a downtrend, right? It's just falling and falling like a boulder rolling downhill. But then boom, it suddenly stops around a certain level. Not once, but twice. That's our first clue. The price keeps bouncing off this same area, so we go, this must be a support level. We mark it on our chart. Easy. Then the price comes down again to that same level. Now listen, this is where smart traders get excited. You don't just jump in, you wait. You're looking for a candlestick confirmation that tells you it's safe to go in. And guess what? It starts happening. As the price moves toward the support zone, the red candles, the bearish ones, start getting smaller and weaker. That's your first signal. The sellers are running out of steam. They're dead and tired. Then, boom, a doji candle forms right at the support. That's a huge flashing sign that buyers are starting to step in. And just when you're thinking, could this be it? A massive green candle launches upward. This candle doesn't just move a little, it breaks above the high of both the doji and the red candle before it. That's a full morning star pattern, and that is your green light to buy. You enter the trade above the high of the green candle. You place your stop loss just below the doji or pin bar. And where's your target, that recent swing high? Boom, the price takes off, and just like that, you're riding the wave. This is what happens when you combine candlestick patterns with price action strategy. It's like stacking the odds in your favor. So if you're tired of guessing and ready to trade like a sniper, this is how you do it. But hey, let me make this even easier for you, because I know building a full trading system from scratch can feel like building a spaceship. So I've already done the hard work for you. Yup, I've created a set of ready-to-use trading systems that match perfectly with the candlestick strategies you just learned. You don't have to spend hours trying to figure out what indicators to use or how to build your chart. I've included a template in this video that you can simply upload to your chart, and boom, it instantly adds all the indicators you need, perfectly arranged for you to spot these setups with ease. No stress, no confusion, just plug and play. So make sure to grab the download link in the description below. It's 100% beginner friendly and will save you a ton of time and effort. And hey, if this video helped you finally understand candlestick patterns and how to use them like a pro, do me a huge favor, smash that like button, destroy the subscribe button, and join the squad so you never miss our next trading tutorial. This is just the beginning. The next video is going to blow your mind even more. I'll see you there.